My name's Greg. I work at ChainSafe. I'm the CTO there. And I've got two lovely guests here. I've got David, if you want to introduce yourself.
Oh, hey everyone, it's David here, founder of OP Crypto. We're recently newly started pre-seed and seed venture fund focusing on really the metaverse, NFTs, as well as a lot of sort of the DAO infrastructure plays. I was previously leading global strategy investments at Hobbies for 4 years before launching the fund.
Yeah, hi everyone. My name is Era. I lead digital assets at Matrix Capital. We're a 9 billion traditional hedge fund, leaping from Web 2 to Web 3. Before I lead early stage investment at Galaxy Digital and also focus a lot of the Asia global expansion there.
Awesome. Thank you both. And so, to kick this start off, let's talk about values, because Web3 is all about values. And when it comes to investments and making a thesis, obviously we're all trying to make money. But when you actually go to make that investment, you're interviewing that project, what values are you looking for, and what do you hope that you can both benefit, not just the fund, but perhaps the people in your own communities in Asia, if you're investing outwards or inwards?
Yeah, definitely. So I think ultimately, when you talk to a founder, you have to understand what is his native drive or what is his motivation in ultimately starting the project, right? I think us as a value add VC really looking to bridge the East and West and helping to facilitate a lot of some of the best Western founders in their go-to-market strategies in Asia. We really try and see if the entrepreneur actually needs what we have to offer, right? So a lot of times when they're just talking to without really needing or thinking about sort of the processes of really looking to tap into the Asia market, which is by far the biggest addressable market in the crypto space, and also my experience at the exchange, whether they need help with that, I think there's a lot of sort of projects that are just there to raise money, just money grabs, and they don't really care where the capital is coming from. So I think that's a big turnoff if they really don't understand what we do right off from the bat, and they don't really appreciate sort of some of the value adds the VCs are providing. And lastly, I think ultimately being able to really go more in depth into why they're ultimately solving the problem they're looking to solve, and how much of a long-term sustainable approach are they actually taking into solving that problem, right?
Yeah, I think I will add on top of it, on the growth stage side where we focus is, I would say the 2017 to 2019 days, there's a lot of experimental ideas has been proven out, and when it comes to 2021 and 2022, it's really okay, what's your go-to-market strategy? What's your growth trajectory, right? Whether it's product expansion, a vertical roll-up. I think for us, our holding period is about 7 years, long duration, or even go to public potential. So that's kind of more on the growth side. I would say on the more Web3 native side, I think now we're looking at the DeFi 2.0 summer coming up, and really it's a new narrative when you think about the new composability, and the more we have the first, I would say the DeFi summer, you have the specialization taking a lot of front foothold. Now you have folks like TriberDAO, now the new bundle service coming up. So I would say that the composability, money Lego part is very interesting, and how we think about next generation the founder will build on there.
Awesome. What do you guys think about the difference between, obviously being in the Web3 space, it's a huge token economics, are 90% of, what we look at. What's the difference to you two, when you look at, okay, this might actually be an equity play versus a token play, and is that something that's even in your mandate that you're allowed to pursue?
Well, I think I take a more contrarian belief that I think in 3 to 5 years, no one in the really Web3 native projects are ever going to raise equity ever again, because I think token ownership is such a better form of giving governance back to the community, having and being able to pass on sort of that ownership and giving sort of upside in sort of that token structure as well. I think equity plays are much more sort of the Web2, the exchanges, right, the custodians, a lot of sort of the brokerages that really needs to be regulated and needs to have sort of those I guess equity holding positions for them to ultimately grow from a Series C to all the way up to IPO, right? I think with form of tokens, you're able to accrue value not only within sort of internally within the company, but externally, really bringing some shareholders that might not be just the investor base themselves, the actual power user that actually contribute to the protocol, that ultimately they're able to enjoy some of the upside. And that's where sort of the narrative is going to be changing into, I think, eventually most people are gonna be turning into sort of that token structure. And even now, so like a lot of times projects raise with equity, but eventually still turn that into like a warrant save or a token warrant, down the road. So.
I think on our side, we look at more like a parallel structure, like for a lot of like service provider, right? When you think about like prime broker, custodian wallet, like the CeFi infrastructure, there by nature is always more entity based, and that's the reason you see like last year, 2021, about like 40 company exceed 1 billion, like massive like growth stage investing coming into space. And then when I come to like January this year, it's very obvious. Even the growth equity guys like Tiger Global, SoftBank, now they're also going to token as well. You see massive like value markup on all of the liquid projects as well. So it's very interesting. I think moving forward from our perspective, we're thinking about the more than activist approach, right? You participate, you stake, you govern, right? There's a lot of different approach for you to get involved. That's a lot of, for a traditional hedge fund, we're also thinking very aggressively how we think about multi-strat future there.
Okay, I like the response, but now I'm going to throw a spit curveball at you guys. Let's talk infrastructure projects. Can an infrastructure project truly raise on a token, and can that token actually drive utility back to the platform? And as an example, let's think infrastructure teams, Alchemy, Infura, right? Can they really actually do a token? Because, and the reason I ask, that's a pretty big play. And like the upside's probably pretty good for a fund. So how would you like look at it that way and say, do you think in the future we're actually gonna see infrastructure teams go on a token versus having an equity play?
I think on the infrastructure side, it depends on like what type of infrastructure it is, right? And like how the token will ultimately benefits bigger ecosystem, right? Like when you think about Ethereum, right? Like the token itself, accrues so much value, or not necessarily right now, but like ultimately with sort of all the gas fees that ultimately are spent with utilizing the network, and all the people that ultimately build within the ecosystem has sort of some exposure to the greater ecosystem itself as well, right? So I think when you're thinking about like an infrastructure, it's not just about the technology itself. It's really about like what are you trying to build, what are you trying to accrue to ultimately build upon that technology, right? So when you think about all the application layer products that ultimately come on top of the infrastructure that you're building, right? It's extremely important for them to have, upside to have in the infrastructure itself, so that whether it's like, ecosystem grants where they give in form of native tokens, where they're able to like, instead of giving away like equity of a company, like Apple is never going to give away its equity of shares to give to developers who build on iOS, right? It's that kind of a concept where it's like, now if you're Solana or every Avalanche, you're able to like give out tokens to the developers so that they themselves have funding to really like go about trying to achieve their vision, but at the same time, you're not really diluting sort of your ownership or sort of your ecosystem, in that you're like benefiting both sides of the way, right?
Yeah, I think to add on that part, I would say the token definition also expanded a lot. 17 we talk about utility token. Everyone is like, I'm like creating a new world, things like that. But I think the DeFi summer, you really, the 1.0 see, LP token, rev share token, right? So depends on the token structure, you can choose the way how you capitalize your startup. I would say on the like entity side, right now the macro situation with different geopolitical risks or the more like interest rate high have dampened a bit like going public route. That's the reason we start to see more projects start to offer more like a liquid token structure to stay like capitalized. And I think as a fund side, I think we're very open to different structure and like love to see how it shape out in the future.
Thank you. Now let's take a like quick break here. We've all been listening to talks and panels, but we're all humans. So let's hear something. What's like something, a hobby or a pastime that you enjoy?
I like to play a lot of basketball. Obviously, I think as a fund manager in this space, you need to get your exercise in, and you need to have like a good mental state when you're talking to entrepreneurs, going through investments, but also maintaining a high level of energy and just being present, at any time where you're working with others, right? Also, like to play a lot of poker, where it's like I think a lot of fund managers do, not only in Web 2 but also in Web 3. So it's just like a game where you're able to really interact with other people, but also like be a better investor. Managing your risk, managing your treasury, managing your bankroll, right? Taking sort of more concentrated bets when you have certain hands that are advantageous to you, but also like playing the field, right? Like what is sort of like the people you play with, that also like you constantly have to like be able to adapt and be flexible in your strategies, and especially as an early stage fund, right? Like, sure, I have a thesis right now for the next 3 to 6 months, but like, the thesis is gonna drastically change 2 to 3 years from now, because like no one's gonna be able to really predict like how the technology is going to evolve, that what opportunities are going to come out like 3 5 years down the road. So we always have to iterate, always have to be early, and always have to be sort of like trendsetters in a space where we need to do our own research, but at the same time help educate not only like people looking to come into crypto, but also like the entrepreneurs themselves, right? A lot of times, I admire like what Paradigm does with their sort of research. They a lot of times give really good product ideas that they thought of as investors, and they encourage sort of the developers themselves to build, right? And we're sort of looking to take that approach, especially in Asia, where there's not as many sort of research-oriented firms that's really taking sort of that approach and really telling people sort of how sort of the next wave of crypto is being paved, and like what people can really do to go about, right, developing in sort of the next iteration of like application and sort of middleware, right?
I think for me it's boxing because easy because this is a high stress industry, right? Like we cover 24 hours market, and innovation comes from everywhere. Now you have subsector like DeFi, metaverse, gaming, right? Like, and also I have personally gone through like 3 massive drawdown, right? Now that we're currently experiencing one. How to be like say resistant, right? Not getting beaten down by a couple like a macro like price action. I think it's very important to sustain this industry in a longer fashion.
Awesome. I'm going to ask 2 questions. One's going to be directed at you, and the other one at you. First, let's start here. Yeah. Sorry. Yeah. Sorry. Sorry. Era will start with you. How do you see the different? The word I was looking for.
How about this?
Everybody laugh. Everybody
let me throw
laugh.
the question back. As a founder on the startup side, when you think about building your cap table, building your community, how you think about the global strategy right now? You bootstrap in US. How you think about going global right now?
Yeah, that's a good question. So we, as a team, span across about 27 different countries. So we're quite out there and large. So we focus on infrastructure, which means we're kind of like really at the lower levels. So for us, it depends on the network that we're building a node for. So we build client software. So like we have an ETH2 client, a Filecoin client, Polkadot, and Mina. And really, it depends. It's really catered to those markets where they're really most popular. For instance, Filecoin does have a large Asia community of miners, and they have very specific requirements on like how that software has to be built, or like to make their competitive edge, especially in that type of a network where latency is super important between the nodes. It's like as they concentrate over in that one area versus North America, we have to really think about like how can we distribute the nodes that way. Hopefully I didn't beat around the bush too hard on that.
That's great.
But the other question I was going to ask, though, is when it comes to the theses between kind of like North American funds and Asia funds, where do you see the drastic difference between them?
I think. Oh, is this for me or for
Whoever wants to answer it?
Okay. Do you want to? Okay. So I think like going forward, because crypto is such a global phenomenon, right? Like I think there will be less of a shift between like what is Asia funds and what is North American funds. Like for example, for myself, I've lived exactly half of my time in Asia and half of my time in the U.S., right? And continue to do so, really splitting my time between the 2 places. So particularly for me, I wouldn't know how to exactly categorize us as whether it's a North American fund or Asia fund. But I think what we really try to do is really like blend sort of the 2 continents, which is essentially the biggest markets in crypto by far in consolidation of everything that's going on. And like we have half the team in Asia that really helps with a lot of the portfolio support, go-to-market strategies, the exchange collaborations, as well as like the market-making relationship. But at the same time, we have a big investor network here in the U.S. where we're able to work with some of the best Western founders and help them think about like how they're thinking about ultimately getting market traction in Asia. But at the same time, when we're talking to people out of Asia, we help them, get looped into some of the best institutional investors here in the U.S., some of the best developers. I think there's resources across both continents that are a little bit differentiated, and I think that's why it's extremely important to have people that understand both sides of the table, that is able to be extremely helpful to projects, no matter where they're thinking about developing their next markets.
Awesome, thank you. Now, Era, I have a question for you. It came back to me. As somebody who's raised capital before, I know how stressful but also anxiety-inducing like the whole process can be for founders. Also, I've been so close to almost sweating. You're the whole flushed face look. It can be intense. But when it comes to advice and to founders who are looking to raise capital, what's let's say one red flag that they should try to avoid doing, and then one thing to just provide confidence to say, it's okay that happens during a meeting because we're human, it's going to happen, and where can you reassure people on that?
Yeah, I think for me the biggest red flag is more on when you talk about your for example how you think about your market, pricing, valuation. Give me a very lofty number without any thoughts put into it. For example, you raise capital, but what you use it for, right? R&D, product expansion. I think that thoughtful approach, that's really important for us. That's probably the most red flag for me.
And how about a vote of confidence? What are common things that happen during meetings that it's okay? That's fine. For instance, maybe for me it's the stuttering. It's back in the day it was I don't know. It's what things happen that we can tell founders hey, don't be worried that happens. We know it's scary. It can be scary. What's some things do you see commonly that just doesn't matter?
I think for DeFi founder especially, you're just ramble a lot of DeFi vocabulary WAGMI, a bunch of words. But you have to understand, for the institutional investor, the learning curve is slightly different. So that's what I would say, dumb it down first. Okay, use some analogy, right? Don't try to assume people understand it. We're a very unique Web3 community, so I would say that part can help out a bit.
Awesome, thank you. We do have 5 minutes left, and we can get a couple more questions here going, but if there are any from the crowd or the audience here, happy to take those as well. Yeah.
Well, my question is centered around your projected financials while you're raising, especially for Web3 companies, since it's a new industry. You often don't have 1 year down the line plans ready, or what you can give back to the investor, what your business model really is probably going to change over time anyway. So what expectation do you have from founders, when they are pitching to you their product or service?
I think from my perspective, it's never about really trying to predict your financial projections, right? I think that's never really the case for investment for us, because a lot of times, projects or protocols don't really have that much market traction, right? I think ultimately it's really about what are sort of the V3s and V4s going to look like for your protocol in terms from a technical development perspective, right? What are sort of the other comparables in the market that you see moving towards that you can really differentiate and carve out a niche for yourself? And at the end of the day, right, all the sort of future projections you can really envision in any sort of project is always about the roadmap, right? What is sort of being said, and are you actually meeting those deadlines, right? And are you actually shipping code, right? And are you able to maybe bring on really good talent to I think talent is also something a lot of I think Web3 companies is the consolidation of everyone on the team and their sort of net worth that they're able to accrue in value in sort of the product that they're ultimately creating, right?
Yeah, I think for early stage, if one thing investor expect is your financial product doesn't look right, it will change 100%. That's just natural. I think at the early stage, really more on the product itself, give me your product demo, how I talk to your engineer, get a sense. I think that's more important to us. for the later stage will be slightly different because right now, you already see like BCDEF companies start to emerge, right? How do you think about the FX fluctuation will impact the business model? How you manage your treasury? That's some thoughts you have to bake in a bit when you grow to that growth stage there.
Hello, hello. Ooh, wonderful. We got time for one last question. Okay, saw the hand first.
So when you're sort of from the founder point of view, one of the things that can be really confusing is when you're new to the space, you've got an idea and you've got some backing, you've got the revenue model all sorted. It's growing that, because when you come from a technical point of view, it's like, well, what the hell do I do now? I can go around, whip around the room, find 50 VCs and raise 25 mil, but then I'm sitting on 4 million in cash, and what the hell do I do with that? So I think that's one of the things where it's really confusing as a founder. Like, what do you do as a VC to help that procedure of how to grow the business from like a basic model?
Can you rephrase the question, please? I mean, all right, because it's like,
How do you help new businesses grow their model if they don't have experience doing it before?
Yeah, no, I think that's actually very important because for us, we do a lot of different case study, like compare, for example, staking as a service, there's different way you can monetize. And I think for early stage founder, right, you identify like a market problem, but how to monetization, whether it's a SaaS or whether it's, like transaction take rate fee, there's a lot of different way. To be honest, I won't worry too much because for any like early stage VC, it's a seasoned investor. They will help you to guide it through. But for you, is to think about, like how to monetize your ecosystem. That's really critical. And that some part is, if you don't have that as a right answer, it's really, important for you to garner your support for your community.
so I think just quick 30-second response to this is that you really need to choose the right VCs that you want to work with, right? So like, whatever sort of protocol that you're ultimately building, you need to see like who's the ultimate expert in sort of that vertical in sort of on the investment landscape of things. So like being able to pick the right partners and them having shown expertise in the past that they were able to ultimately help some of their portfolios in the past and really shipping their go-to-market strategies and ultimately helping them, be ahead of the curve when it comes to like development and execution. I think, and that's why, all different VCs, they have different value adds and different sort of thesis and focuses. And it's important as a founder to really identify those at the early onset of things. And they almost act like a co-founder alongside you to really best, help your project in the long term.
On a final note for that, as somebody that's like raised capital, definitely look for recommendations. Try to find people in your network to talk to about who you're raising from, because, as David said, the most important thing is the right person that can actually not just say they can give you value add, but can actually sit down with you, whether it's once a week, once every 2 weeks, actually chat about things. And I think that's the most important. And I'd just like to give a very nice thank you to these lovely two who bared with me. And if you have any questions, I'm sure there'll be somewhere around and you can chat with them.